Hi everyone, I'm Tony with Clarkson Santoro, and this is your weekly real estate update for September 2nd. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone looking for a house that you will love to call home. The current inventory is 62 homes, down 13 homes or 17% from last week's number of 75. The average asking price of those homes was $1,962,000, which is down from last week's average of $2,001,000. 16 homes asking an average of $2,056,000 went pending this week. That is the same number of pending homes as last week's number. Higher average asking price from last week's $1,787,000. A total of 12 homes sold this week with an average sales price of $1,953,000. That average price was slightly down from last week's average price of $1,960,000, and the total number of sold homes was lower than last week's 17. Okay, so now that we know how our market performed this past week, let's look at the key metrics that we track that help us understand where the San Ramon real estate market might be heading. The first is inventory. The inventory has continued to drop this week, and we are now 13% lower than last week. Now that we are sitting at just over 60 single-family homes on the market, we are as close to a neutral market as we have been since 2019. The inventory level still leans slightly in the buyer's favor, but not by much anymore. This indicator score came up to 38 last week, and we will raise the number again to 43 as we move even closer to a normal inventory level. Directly related to inventory levels, the next metric we watch is market turnover. The turnover rate jumped up 20%, and we are now above that 1.0 mark. Our inventory is now turning over 1.1 times per month, which is still much noticeably slower than early spring market, but it is a market improvement from just 2 months ago when the turnover rate was less than 0.3. Last week we raised the score to 46, and it is raising above 50 to 55. The over-under asking price is the next indicator that we track. The price came up a little bit this week by about $5,000 on average. That average still puts the sales price at a little more than 2% under the list price. This number lags behind the inventory and turnover rates, but I expect will stay around the plus or minus 2% range for the duration of the year, which is a very typical San Ramon market. Last week we gave this indicator a score of 45, and this week we are raising it just slightly by 1 point to 46. The last statistic that we watch is the average sales price. This week, the average closing sales price did drop a little, but the overall trend of the past 45 days has seen the average price increase. With the increase in the market turnover and the decrease in inventory, we expect to see this number continue to climb in the coming weeks. Last week, we gave this indicator a score of 63, and this week we lowered it by a few points to 61. The first two metrics we pay attention to that help us predict where the market is heading is the strength of the Silicon Valley tech industry. Our San Ramon market tends to track very closely with the tech industry, and that corner of the market took a hit this past week. The Triple Q Fund had been slowly climbing out of the slide that had started in March, but the Fed chair's comments about pain on the horizon seems to have put a halt on the recovery for now. We will see if optimism wins out in the coming weeks, but for now we are dropping the indicator score from last week's score of 44, and this week it is down to 40. Finally, we track average mortgage interest rates. These numbers also had a negative reaction to Chairman Powell's comments last Friday. Rates had been down to the low 5% range, but since his comments, they moved back up into the high 5%. As of yesterday, the average interest rates are at 5.66%. Last week, we gave this indicator a score of 39, and this week we are lowering the number down to 34. Overall, the market has been making some positive movements in the past couple of weeks, and there are still plenty of positive indicators that play a role in the overall market health this week, despite the negative pressure the chairman's comments put on the market as a whole. For sellers, the continued decrease in inventory and the increase in turnover is a positive sign that points to a market that will make selling your home a little easier than the past couple of months. but it still doesn't remove the necessity of really preparing your home to impress as many people as possible if you are going onto the market anytime soon. As for buyers, the increase in interest rates and reduction in the stock market should help slow down the market recovery enough to give you a little breathing room. The risk you now face will be if interest rates continue to climb, your buying power will decrease. This is still a market that leans a little in your favor as the buyer, but that looks to be on the verge of changing in the next month or two. Last week, we scored the overall market at 46, and this week we are raising it again to 47. If not for the stock market and interest rate shift of the past week, we would have passed the middle number and be leaning towards a seller's market. As of now, we do believe that the market is basically a toss-up, but maybe just slightly leaning to the buyer's favor. I hope this weekly summary and commentary helped you understand the market better and how it is affecting you. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend, hit the like button, and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.